What do you know? Tech can sell off, and today we saw a lot of intraday market volatility. Yes, that is the cues on the 5-minute time frame. On the SPY, we saw something very similar take place, a big sell-off towards the end of day. And the IWM, very similar story there. A lot of market volatility that took place. If we take a look at the Nasdaq 52-week lows, well, we spiked to another high right there for the year. We've been pointing out that these new 52-week lows have been building up. Meanwhile, the market has been rising. Now this is starting to look like the Island Boys neck tattoo. We got a lot to talk about on today's episode of the Stock Market Brief Show, everybody. Let's get into today's show.
I'm gonna just keep going. You're gonna keep that going. I'm gonna just
All right, welcome back. We're looking at the market dashboard. And as you can see here, energies and financials led the way. Technology down there towards the bottom. Consumer discretionary also landed itself in the red. Now, this is something we've been talking about. We've been talking skate to where the puck might be going. And we don't necessarily know. Yes, energy and financials took the lead. So if, were to catch that or trade that intraday, congratulations. But we don't know if this is still going to be sustainable at this particular point in time. There was a lot of market volatility, a lot of uncertainty taking place. So in the show today, I'm going to be talking about some utility plays potentially to maybe keep an eye on. Not to say that financials and energy can't continue to kind of just, catch back up to a technology if it continues to sell off. But I want to at least get some utility names in front of you, because if utility wants to pick up, that might be something we want to pay attention to. Let's take a look at the market health dashboard over here, we'll call it. Nasdaq Composite. The Nasdaq Composite, as you can see, sold off today. Let's look at some of the indicators. PPO did cross over, and it's kind of spreading itself to bearish territory, but it's still above zero. You can see here was the 52-week lows, that big spike up to over 500, so a big 554 new 52-week lows in the Nasdaq Composite. That's a big move right there. So very interesting. Typically, this is where one of two things happen. All right, big breakdowns take place, or we find market bottoms in various stocks. And if you take a look at the overall price action, one would think that it would be finding market bottoms in various of these different stocks, because we are still relatively very high, and we're still above the 50, the 200, and the 20-day moving averages here. So, proceed with caution, but overall, you typically, most likely, will see some stocks bounce significantly here in the days to come. Now, the composite over the S&P 500 still above the 50-day moving average, so that's good, but it is pointing down at this particular point in time. Another oversold indicator, getting to very oversold, is the NAMO. Now, this is a McClellan oscillator, and typically when it reaches down to these areas, you have it when the market typically sells off. So when it, for example, right here, see this little bounce right here, and it came all the way down to a minus 60, a little bit lower than that reading. Well, now we're almost there, but the market's still relatively high, so it can get into more overextension here, but just be ready and be prepared, because chances are people aren't paying attention to these oversold readings and the market's selling off. They are going to become very frightful, and chances are they're going to turn into a bear when everyone should be looking to be a bull to catch a bounce to the upside. And if you look at advanced decline line, we are crossed below the 50-day moving average right here, and that happened as the market was rising up. So that gave us an early indicator, along with this right here and this right here, all gave us early sign warnings that, hey, the market might see weakness. So if you've been following along, you obviously know what I've been talking about. Now let's look into the next one. This is the New York Stock Exchange. Same indicators below the PPO, bearish crossover heading down, pretty darn steep, but it's still above zero, so that's good. You can see 52-week lows have been building up here too as well, but you can see the market's been selling off as this has been rising. Okay, now typically when you get this, right, rising new lows, this typically the market sells off, and then it finds a bottom when it reaches an extended area and then bounces. So we're doing that right into the 50-day moving average and right into a lower Bollinger Band. So perhaps we're going to be getting those bounces, is which I'm talking about. Now, if you look at the relative performance over the S&P 500, little bit of an uptick, ever so slightly, but it's still well below the 50-day moving average. The 9MO, this is a McClellan oscillator, also getting into those overextended readings down here where it's typically likely to see some sort of a bounce. Now, if you look at the advanced decline line, this has been sinking as well, but it is above an inclining 50-day moving average. So this overall looks fairly well. Now let's hop into semiconductors. Semiconductors are an important portion of the Nasdaq Composite. Okay, if you just take a look here, we had a gap up, rallied, ramped up higher on the negative divergence, which we've been talking about on the Nasdaq, and then it completely reversed itself onto the and closed basically at the low of the day. So pretty nasty, bearish, engulfing outside trading day for this specific candle, which does suggest that there could be potentially more weakness ahead in semiconductors. Now, if you take a look at, Nvidia is the highly, sought after retail trading stock. You can see just insane amount of options being traded on this one individual stock. And you can see, just look at this chart. This is the ETF for semiconductors, and look at this chart. It's the same thing. That the price action looks absolutely the same. Now, also a bearish engulfing candle, right? So it could represent more downside. But in order to really kind of dive into Nvidia, because I know people are going to want to, buy more calls or, buy puts or do whatever it is that they do to trade this. And I know this for a fact because you can look on Thinkorswim. But if we bring up this chart of Nvidia, I'm bringing in this data right here. This is weekly expiration. I just pulled this at end of day. And as you can see, 15.15, that is what the options market is expecting, okay? An expected move for the remainder of this week. And some data suggests that, now I didn't do this study, other people did this study, where the options market is typically right on these expected moves. It should finish within it about 68% of the time. So if I were to take 15.15 and move it up and move it down from the closing price, that would bring us right here, which is just above 1340. We'll call it 1335, and then right down here, okay, which would be the gap fill. So if you are looking to trade Nvidia, and you're seeing that, hey, volatility is still there. It's expecting by week end a $15 move. So it's going to be quite aggressive, right? And chances are 68% of the time it ends up within this range. All right, so what can we potentially look for? Well, if you think that there's going to be more of a sell-off, which price action alone could suggest that just because it was a bearish looking candle, but we need to get follow through, right? Perhaps a good setup would be this gap fill, which would just so happen line up with the expected move that the options market is already pricing in. So if we get more sell side into this, it is overall in bullish context, but perhaps we get a gap fill, and then it's also matching that expected move. The 20-day moving average might move up a little bit more too, and that could present itself as that minor pullback to potentially get a continued rally. And what's most important about all of this is your risk to reward. So if it does come down here and then just kind of burns a little bit quicker down to the downside, well, first off, you could just have a stop under that or slightly under the 20-day moving average. That right there would be able to minimize your risk for potentially a bounce play. So it's all about risk to reward. It's not about being right or wrong. It's about making sure that your losses are smaller than your winners. That's it. That's how you be successful in this game. Now, if we take a look at yields, we've been talking about the rise of yields, right? If they start moving higher, that can put pressure on tech. And well, today we saw a rise in yields. As you can see, the 30 and 20 remain inverted. The 30 and 5 spread have flattened out more today. And you can see a big move up there in the 5-year. Let's actually look at the individual yields here. T and X, this is the 10-year yield. You can see this thing is just looking like it might be firing off an inverse head and shoulders. It's right there at that neckline. And, things could get pretty sketchy if it gets above that 1.17 on the chart, but 1.7 yield, and it's not too far off, to be honest. If you take a look at the 5-year, broke out of this bottoming pattern, and it's starting to kind of clear this pivot area so far. This is a weekly chart. Okay, it's a weekly chart. So the week's not over. This could reverse. We don't know. But, overall, a pretty strong start to the 5-year for the week. And if you take a look, this is all happening while the dollar has been just exploding to the upside. It broke through this little pivot area, this resistance, and has been firing off. Meanwhile, yes, we're seeing individual, multiple stocks hitting those 52-week lows, and the S&P 500 sold off ever so slightly today, but we didn't, it's still relatively consolidating right around at its all-time highs. So it's very interesting to see the dollar keep on cruising up here. Meanwhile, gold definitely did not like the rising dollar. You can see here, gold sold off 2.45% today. day. Is this just a temporary thing? Maybe, but maybe not. That broke down through that 1840 level, so proceed obviously with caution there. With gold and silver also sold off into the 100-day moving average. RSI is back below 50. PPO looks like it's going to have a bearish crossover, and it was down about 2% on the day, so not the strongest look there as well. Meanwhile, oil didn't do all too bad, right? We gapped down and we closed higher on the day, up 1%, and it's still kind of within this tight wedge pattern here. So, it's going to do one of two things. It's going to break out and we're going to see some force to the upside, or it's going to break down. I am more of a bull here in this case, only because I would take... You okay? My dog just yawned. I don't know if that got caught on the microphone. That was weird. My personal take is more bullish because price broke out. It's putting in higher highs and higher lows, and then it pulled back into a previous area of resistance and support. So until, it closes down below this area and starts heading lower, then I become a little bit more bearish, but it is still an inclining 200-day moving average. So yeah, if you have a stop down in this range, or, if you're trading individual energy stocks and it starts breaking out, I like the risk to the reward perspective from a bullish perspective more than a bearish perspective. Now, as we know, Biden picked Jerome Powell to lead the Fed, so there's been a lot of shakeup. This news just came out, so Jerome Powell has been chosen for a second term. Seasonality, right? Is seasonality on our side? We're starting to see some selling take place, right? Which matches up for the average year. Post-election year typically matches up a little bit too, right? We get a little bit of sell-side activity, and then it kind of sells off into December, and then we have a Santa rally. So seasonality script matching so far. Are we going to get that end of year rally, or we're going to get continued sell-off here? It's very, very hard to determine at this particular time. Still, eyes have to be on big tech, because if yields continue to rise, well, that can still continue to put pressure on tech. Now, if you just look at the heat map of the S&P 500, what do you notice? You see a lot of green, but you see some big red squares, right? Well, the big red squares, S&P 500 is cap weighted, and the big names were in red. You had Amazon, Microsoft, Google, Facebook, Nvidia. Apple was rather flat, right? And then Tesla was one that was actually up on the day. If Tesla was down significantly today, there'd probably been just more deeper of a red day overall. Okay, so very, very interesting to be seeing this sell-off take place. But if we look at a weekly chart of the S&P 500, we're still above the weekly 5 EMA. The weekly 5 EMA is at 4654. That can still hold this support. The week did get above these previous highs, overshot it, came back in. We need to see a week closing below the high, closing above this high over here or below these lows over here. So right now it's really just range bound. Looks like it could potentially come into the weekly 5 EMA, and that can act as a potential pivot area. So that's one to keep an eye on. If you look at the daily time frame, let me scoot over to the daily time frame. You can see bearish engulfing candle. It saw a nice big pop. Everyone was like, wee, yeah, it's because Jerome Powell. And then all of a sudden it sold off and completely reversed. So some very crazy price action. You need to be very careful, but we're still above the 20-day. We're still above the 50, the 100-day moving average, and the 200 as well. But just note, like, we got extended. We moved really far, really fast. We pulled back. We came up. Could be a potential double top, little false breakout here, but we're still trading right at around the all-time highs. So yeah, it's a pretty wicked day, and it could be some more sell-off take place, but I wouldn't get too worried at this particular point in time, because it stands right now. We are trading right here within a period of consolidation, a little channel, okay? And that could change, but you got to just keep an eye on that low, and you got to keep an eye on the upper portion of this channel. It's 4725, so if it has a daily close above that, they can be very bullish. All right, let's move on. VIX definitely did see a pop today. We closed one of the gaps that we've been talking about, but we still have this one as far as the risk to the downside in the S&P 500. So, yep, we saw that little pop up into close. VIX has been putting in higher lows here for some time while the S&P 500 has been kind of rocking higher. So this would be the one to watch, which is right at around 21. If it gets up there, that could very well be the pop, and then we could potentially see a little reversion there. But you never know. We have another gap even further above us into the 40s that is still open that can definitely get filled, but that would have to be some insane volatility to just step up out of nowhere, right? Let's take a look at the Nasdaq 100. Nasdaq 100, what was one of the warning signs we've been talking about? Well, we've been talking about the negative divergence on new highs, and we call that right around this range. Well, it happened, and then we got our sell side activity that took place. But guess what? Overall, we're still right around the all-time highs. So this is normal, right? It's not like anything absolutely absurd or crazy. Today's price action was a little all over the place. Maybe it has to do with the recent news about Jerome Powell. There could be a bunch of different narratives. What do we need to keep an eye on? Well, keep an eye on the 20-day moving average. Let's zoom in actually a little bit to this. And you can see here the 20-day moving average on the Nasdaq is right around 16,100, slightly above that. So 16,200, that could be a little zone of support there that the big tech can potentially roll into. Okay, if we go to the weekly chart on the Nasdaq 100, the weekly 5 EMA is at 16,200. That coincides with what? Our daily chart, which is right there around the daily 20, and that would act as an area of confluence for support potentially. So that is what you need to keep an eye on. If we take a look at the BP NDX chart, as Nasdaq 100 continues to trade around its all-time highs, this has been heading lower significantly faster. So if this gets into that overextended territory, while I've been saying that the Nasdaq comes down into the 5 EMA on the weekly chart, or potentially even to the 20, right? Or in this zone, that would probably trigger this to be overextended and also add to the theory that we could potentially hedge long or find some sort of bounce activity. If we take a look at the heat map for the Russell 2000, so look at financials started moving higher. That was one that we talked about on the conclusion of last video, to pay attention to financials. Up on the day. Energy, another one we talked about, up on the day. So why did the IWM finish down so badly? Well, obviously a couple of things, right? Healthcare is the number one exposure to the index, and then information technology is not too far off under financials. And if we can actually look at that by looking at the exposure breakdowns, you can see healthcare, financials, information technology right there. So some big weights, and we had, well, healthcare was one big one and information technology both down on the day. So although financials performed, and you need financials to perform in order to really help the IWM, overall, small caps did good from a relative standpoint. As you can see here, the small cap S&P 600 was actually up on the day. Meanwhile, all the other indices were actually down. Okay, so if we take a look at the IWM on the daily time frame, you know, the candle itself, not that great looking, but it was looking good as it came into the 20-day moving average and then reversed, like all the indices, into the low of the day for the close. Look at, let's look at the 50-day moving average potentially as the next area. That's around 228. That can be an area of support, but there's also some previous kind of like confluence of support with some candles right in this area. So 228 to 230 is a very, very possible area to reach, okay? And if you look at the daily time frame zoomed out a little bit, you can see here we broke out and we're kind of coming in. This still seems pretty controlled for the most part, so let's just be mindful of that. I still think that if we have the rotations that take place, which we could kind of see lightly today, it's still a very strong possibility. So this was a nice breakout, and it's kind of coming in right now, potentially, right, into this area which we just mentioned, 230 to 228. This kind of zone in here is what I've been kind of keeping my eye on overall. Now, let's zoom into the Dow Jones. We'll talk about this very, very quickly. 20-day moving average came right into that, also flipped and closed on the low of the day. And you can see it's still above this previous area of resistance right here at around 352 to 354 as an area of support. And if you take a look at utilities, this is where I kind of want to get into the opportunity. So utilities is more of a defensive posturing. And as you can see here, it's been really just kind of just tightly trading within this range here. And today we saw it up 0.61%, breaking out of this pivot area. Now, is this something that might get followed through? I'm not too sure. However, we did close here, and that's, you know, the highest close since really October, you know, slightly into late September. So we are making progress with utilities. So I figured why not take a look at some utility plays, because, you know, if you are playing tech still, it might still be good to have exposure to something like utilities if it's going to catch some more of a bid to the upside. So a couple names. One of I've already mentioned was CNP. This is a utility point, center point energy. And you can see here, it's been seeing some volatility, but then it's been contracting like so and getting pretty tight with its price action as it's pretty much just right here at these previous highs. So if we start getting above this 27 range, that could present an opportunity for a pop to the upside. Another one a little bit more volatile here is NEE, and this did recently break out. So from a relative standpoint, that's pretty good. It broke out to that high right here. We have resistance, and that might now become an area of support. So perhaps it comes down and maybe retest this 86 area or 20-day moving average, and then finds another move higher if utilities want to continue its leg up. Now, I'm going to go into some crypto just because I know people like to obviously follow crypto, right? It's a very volatile asset and you can do very well on it. Well, the sell signal is something that I like to really use. If you don't know what the sell signal is or the buy signal, I made a video separately that walks you through how to use this. As you can see, we had a sell signal, market sold off, a buy signal, boom, and you can see these false ones right here. If you don't, like, you'll only know that if you watch the video of how I determine these as false signals ahead of time. Then you had a sell signal, a buy signal, boom, and then a sell signal. We're seeing some sell side activity. So right now it's still on a sell signal, right? But it did kind of like, slow down a little bit. So I'm waiting to see if this flip back over. And once it flips back over, that's going to be a sign where I'll be starting to re-enter into some crypto plays. As it stands right now, I can trade intraday throughout them, maybe potentially a shorter swing trade, but my position size or my bigger portfolio, I typically wait to see now, and I trade around this strategy here. Now, if I take a look at Bitcoin by itself, it's not looking too great, right? Overall, it's not horrible, but it's not, let me break it down. Why would it not be too horrible? First off, you have a high, a higher high, a higher high, a higher high, okay? Then you have a low, a higher low, and a higher low. So from that perspective, it's still in an uptrend. So things are still good. And honestly, if you were to connect just this line to that line, it still says that it could come down to around 52,500 this, and it would still be in a following that uptrend. Okay, but a couple of things that don't look good in the short term. Well, first off, we broke down through this previous area of support. So we have technically on a shorter time frame a high, a lower high, and a lower high. Then we have a low and a lower low. So in the very short term, the trend has changed to slightly bearish. And you can see here, this could be a dead cat bounce, right? So we came here, we saw a little bit of strength, and now we're rolling back over. So if we start cracking down through this area here, that could present more sell side potentially into that 52,500, which would coincide with this previous area of resistance, okay? Another thing to pay attention to is it's still below the relative strength between Bitcoin and S&P 500. I don't know why it does that. Is still below the 50 EMA, as you can see right here, okay? So there's a couple things that need to take place in order to rebuild strength. So Bitcoin, we might see it bounce up, but that's still, it's like we still don't know if it can come right back down. There's still a lot of work that has to be done in order to kind of just repair this recent fall off from this high 68,000 range to where it stands right now. If we do start getting above 60,000 and back above this 50-day moving average and back above the 20, that is at least the start. So that would start looking a lot better right now for the price of Bitcoin. Now, if we take a look at Ethereum, pretty similar story, right? So we sold off, right? On the sell signal, we have a high, a lower high. We have a low that hasn't been actually technically taken out here. But if you zoom out, right, on the chart, you have a high, a higher high, you have a low and a higher low and a higher low. So it's still relatively in an uptrend, but in the short term, we're seeing some weakness, okay? And then on a good note, right, the 50 EMA, it's upsloping, and price on the relative strength still remains above it. So if this starts crossing below it, we start taking out this 4,000, I can still see the possibility for more sell side to take place into around this 3,600 to 3,200 zone in here, okay? What we need to see from a bullish perspective is getting back above 4,400 and holding that. So that's back above the 50-day, back above this previous little spike here, and then that would be obviously more bullish for the price of Ethereum. Now, like I said, it could be potentially a dead cat bounce that takes place, but also from a bullish perspective, it could be a little double bottom that takes place. Now, in order to be a double bottom, what you need to see is you need to see that 4,400 take place, because a double bottom would look like this: one low, bounces, another low. Sometimes it's actually an undercut, but then you want to see it come back up and then take out this previous peak. So if it comes up, and then that would be the good entry point to see if there's more strength that comes in from just a technical perspective and a good risk to reward, where you can have a stop loss if you're intraday trading, or if you're just looking for new hedges to put on for your crypto portfolio. All right, everybody, that's all I have for you on today's episode. Just to really wrap things up, Okay, you got to be very careful. Obviously, today was a very wild day. Perhaps this is just the market digesting the news about the second term with Fed Powell. Perhaps this is just some positioning taking place into the holiday weekend, right? It's going to be a shorter trading week. As always, there are some, there's some very interesting divergences taking place in the market, and we're starting to see some follow through there. So you just need to remain very careful and very cautious in this environment. That's all I got for you. Have a wonderful night.